Welcome to Market Week in Review for the week ending November 18th, 2022. I'm Sophie Antal-Gibert, and I'm joined today by my colleague Alex Cousley, investment strategist from our Sydney office. Hello, Alex. It's wonderful to see you today.
It's lovely to see you too, Sophie.
Terrific. Well, I'm very glad. Thank you for getting up, I guess, probably very early in the morning your time, because I know we were recording late my time today on Thursday, November 17th, actually. I am hoping that we can pick your brain on three topics. You are such a China expert, so I would not be able to let you go without asking at least some China questions. Then moving over to the US, I'd love to get your take on the Fed. And then shifting even further, I'd love to get your take on the new UK budget. Does that sound good?
Sounds great.
All right, perfect. So starting maybe with China, we recently had some new announcement about zero COVID policies and also some announcements around property coming out of China. How should we be interpreting those announcements? Are they maybe the end of bad news, or is that too positive of thinking? What's your take on that?
It's a great question. I think we're getting near the end of bad news. It's important to note that the zero COVID policy isn't going to go away anytime in the in the near future. It likely will happen sometime in Q2 is probably the most likely timing, because basically China will be out of winter by then, and hopefully there'll be enough of a vaccine booster rollout that they can kind of get to that stage where they do get to start to reopen more officially. But it's nice to see that the government are kind of moving towards these ideas. They've done some small things. So the quarantine for visitors has been dropped by 1 day. It's still substantial, but it's 1 day. And the other part is around property, and that's where again I think the bigger challenge still lies. The property market is still in a pretty tough place. Home prices are still falling. The consumer confidence around buying houses is still quite soft. They released a 16-point plan, and there isn't too much detail in these plans. It's kind of 2 to 3 lines per point. A lot of it is basically just kind of reinforcing what's been happening lately, which is more that the local governments have been taking the role of trying to encourage more home ownership, so reducing mortgage rates and trying to provide incentives. And it hasn't really shown too much work yet. I mean, we saw the credit numbers most recently. Mortgage demand was still very soft, so that is encouraging that we're seeing more from the central government. But in terms of new measures, there really wasn't much funding put forward. So I think we'd still want to see, perhaps at the next Politburo meeting in December, some more concrete plans around this, and particularly some funding to try and alleviate some of the pressures in developers.
Pivoting a little bit to the US, we had the Fed, we've had a few more Fed officials sort of express some concern and resistance, maybe pushback around the idea of a Fed pivot. I'm curious your take on that. How seriously should we take that? What are you expecting and anticipating, and what should investors be taking from that?
Yeah, so we've had a number of Fed governors come out following that softer than expected inflation report. The first was what Fed Governor Waller, who basically pushed back on this idea of a pivot, said we're not there yet. And then we had Lael Brainard, who is the vice chair, basically say a similar thing, but did say that she thinks we're getting close to the point of slowing rate hikes or slowing the pace of those rate hikes. And so I think what they're really leaning towards is this 50 basis points in December. And the market has moved pretty aggressively on that. They were kind of more split just a week ago on 75 versus 50, and the market's very much in favor now of 50, and we think that's probably appropriate. But in terms of, I mean, for the Fed pivot, we still think, that there's still more rate hikes to come next year. So, this will get them to 4.25, and we think that 4.5 to 5% range is where they probably end up. So the terminal rate about 4.5 to 5%. So one more in December of 50, and then probably another 25 or maybe another 25 after that.
All right, excellent. Well, we will definitely be keeping our eye on that. I'm sure there will be more to come very soon. Speaking of another place we've been keeping our eye on has been the UK. The new government has just made a new budget announcement. What caught your eye in that announcement?
Yeah, it was interesting kind of coming into this because obviously there's been a pretty big debacle in the UK government on that unfunded tax cuts that was suggested by Elizabeth Truss, and that eventually led to her resigning. There was a lot of talk coming into this budget about austerity and the UK government bringing forward austerity, which is a pretty tough position to take given that there is a lot of pressures on the UK economy right now. And what we've seen, the reality of the budget is that kind of austerity can has been kicked down the road a little bit. There is still a balanced budget, but it's much further out into the distance than what the previous, what the rhetoric had been leading into this. The forecasts, though, are pretty bleak from the UK government, and they're quite similar to the Bank of England. So the Bank of England and the UK government now expect a recession to last through to 2024. That's the longest recession since World War II. So there are a lot of challenges for the UK economy right now, not to mention the fact that the Bank of England are going to keep raising rates into that. I think the one thing that stands out for me, though, is in terms of the energy price cap. So they've kind of kept that, and so that should alleviate some of the near-term pressure on inflation. But inflation came in at 11% this week for the UK. So even a small alleviation is not that much for the Bank of England. But yeah, less austerity than was suggested, but still a very tough place right now for the UK economy.
Well, unfortunately, that's all we have time for today, Alex. But thank you so much for your insights. I really appreciate it. And thank you for joining us. We'll be back again soon.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.